CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner, we have with us today Richard Green from Rootstock Labs. Richard, hi, thank you so much for joining in. First of all, talking about the month of October, which usually is a positive month across last many years, but this one doesn't seem to be turning around that way. And more importantly, there are more leveraged positions that seem to be getting liquidated. How are you reading October this time?
Yeah, absolutely. I think that there's a couple of reasons for that. You're seeing with the US FOMC meeting approaching and also the US-China tariff meeting that traders are assessing their levels, looking at whether they are risk on or risk off. And so I think it's more of a holding pattern than anything else before they start to make their decisions based off of the back of what Powell says in that meeting. And then obviously within that open interest and the futures side of things, that was a huge amount due to what occurred with Trump's announcement due to the tariffs. And what that's coming from is mainly leveraged positions. So those people who had large leverage positions being liquidated, and that's not always a bad thing within the markets. It's something where you are kind of clearing out a large amount of those that are potentially over leveraged. But what I think was very positive for Bitcoin especially was that the low that you saw after that open interest falling away and those future positions closing out was that it wasn't as low as it previously has been.
Well, Richard, October also saw some other positives like more banks onboarding crypto services like the likes of JP Morgan, Citi, BNY. How are you looking at banks now getting into the crypto space?
You're seeing the likes of Citi, Societe Generale, all of these banks and Western Union institutions coming in. And what you're usually seeing them doing is they're obviously coming in with a crypto-centric or a Web3-centric partner. So if you're looking at Anchorage Digital with Western Union, if you're looking at Citi and Coinbase, they're choosing a very well-established partner to enter the market and deploy, whether that be a stable coin, whether that be something for their customers. And I think that what is great to see within that space is that they are entering the market. They're doing so incredibly cleverly with a partner. So they're taking a risk-on approach, and they're wanting to review not only what are we doing, what is the world of crypto about and tokens, but what is the infrastructure world about with blockchain? And that's exactly how blockchain should be looked at. It should be considered as an infrastructure layer. And how can I, as a bank or an institution, use it throughout my business, not just in a single space? So I think that you're seeing these banks and institutions going into the world of Web3 crypto with a gateway kind of product, testing the waters a little bit. And what you'll then start to see is that starting to grow into the bank as a whole, whether it be back office, middle office, payments, and those kinds of things. So again, super positive news.
Richard, just taking a step back yet again and talking about the leverage sell-off that the street has seen in this month itself, would you say spot is better to trade within ETFs even better rather than doing leverage trade?
Yeah, I think that the market in itself has been predominantly, especially Bitcoin, has been predominantly a spot-driven market over the past, let's say, a number of months up until about April or June. And what you then started to see was that it becoming more of a futures-driven market. I think that the volume, looking at like CME futures, you're starting to get an increase in volume back to previous levels that we saw. So people are re-entering with those positions, and they're doing so in a speculative way. But there's been that more of a spot-driven market when you start to look at the things like the ETFs coming into play, right? So the Bitcoin ETFs are already incredibly successful. You've seen more ETFs coming to light. Solana ETF launched this week. And so I think that is driving more of a spot market as well.
The other thing that also is doing well, Richard, is the tokenization of assets. The RWA numbers are now picking up quite strongly. 2025 is only built upon what 2024 did. Are you looking at 2026 building upon this yet again? Are you looking at growth continuing in the same pace?
Yeah, I think it's only going up. I think that if you look at the you have to look at different things when you're talking about tokenization. You have to consider the infrastructure that sits behind that. And you've got significant players in this space. If you look at Securitize, they've just come out announcing that they're going to be listing via SPAC. And the infrastructure that sits under a firm like that is very TradFi relevant. It's regulated, it's compliant, and all of those things. So I think that what you will see is more and more people considering tokenization, not just as a way of distributing their funds or whatever asset it is that they're wanting to tokenize, and increasing that kind of market that they can appeal to, but also they're looking at it from the technology standpoint, 24/7 trading, fully automated tracking in terms of it all being blockchain present and things like that. So I think that where you'll continue to see more tokenization is in inefficient markets. So equities are fantastic in TradFi, lots of liquidity, lots of trading. And so that's a great place to be, but it's actually probably more the fixed income markets, the private credit markets, those kinds of areas where there is a greater opportunity for tokenization and the benefits that tokenization brings. So I think that more and more Web3 crypto and native businesses will adopt tokenization for all of those reasons mentioned. And you'll also start to see the TradFi institutions moving over, like you already have done with the likes of Franklin Templeton, Apollo, and those larger asset managers.
Richard, one final question, and as we move along from here, we have seen stable coins do quite well, but even with what the numbers that we are looking at, perhaps 99% is still US-backed stable coin. How fast do we see other countries following, and what is your sense on the Asian markets picking up on this one?
I think US dollar will always be dominant for a number of reasons, in the sense of people wanting dollars as a hedge against own currency inflation. But I think where you'll start to see more stable coins arising is within nations where there is a need for, again, the infrastructure benefits of stablecoins. So if you look at emerging markets, if you look at Latin America, Asian regions, India, and those kinds of places, there could be benefits to help with the payment systems that they have. I think that if you're looking more towards the likes of the European regions and the UK, obviously where I'm based, there are still conversations around, well, should we be bringing stable coins to the market? Well, our payment systems in Europe and the UK are pretty strong. And so the reasons for using a CBDC or for a privately created stablecoin are probably less so, but there are still very strong benefits to it. So I think that what you'll most likely see is these stable coins arising from different regions and being on-ramps into the major stable coins such as dollar. And there'll be a lot of businesses setting up alongside that to help people moving in and out of local denominated stable coins into dollar denominated stable coins and back again, making that transition as easy as possible.
Thank you, Richard Green, for joining in and talking about the whole host of things that seem to be bothering October, but look positive and it looks longer term there.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.